Hello, welcome to episode number 41 of Daily Market Mastery with me, popular investor Christian Rauchenwald. As always, in Daily Market Mastery, we take a look at my portfolio, the positions in the portfolio, and use Elliott Wave Theory or the Elliott Wave Principle to try to predict the future market movements and analyze if our positions still make sense or if we should maybe change them. We didn't have the stream as usual on Monday, but I had to push it to today because something came up the last 2 days. And as a result, we probably will also push next week's stream since we are using mostly 2-day charts. So where one candle is 2 days and we only have 3 trading days left in the week. So till Monday, not a lot should change. I'm also right now considering if we switch to a bi-weekly or even monthly format for the portfolio reviews, because simply the movement that we have week to week often isn't sufficient to really talk about a lot of change unless we find the time or use the time to look into alternative positions. Now, obviously, everything, all the resources that I'm using, the software that I'm using, the link to my portfolio, so you can check out my track record that you can also see here, link to the book that you can read online for free or download or order a physical copy, and everything else I'm using is linked in the description down below. And then last but not least, before we get started, actually, the usual disclaimer. Everything that I share in this live stream / video, depending if you're watching it live right now or as a recording later, is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. In other words, I'm just sharing with you what I'm doing and why I'm doing it. That doesn't mean that it's right. Nobody is 100% right, or nobody's right 100% of the time. And it doesn't mean that it's the right decision for you, because you might have a different investment horizon, risk appetite, or so on, and so on. And therefore make your own choices. Use the information I provide in combination with other information that you do find to make your own decisions. That's it. Let's hide that message here and let's jump into Motive Wave. Again, you can find links to all the tools I'm using down in the description below. Now, if we take a look at the portfolio, it's quite frustrating right now, of course, because if we check it out here, we see that currently everything is in red. Now, keep in mind that long-term, actually, our SQQ and SPXU positions are in profit. So is our GameStop position because of the profits that we took earlier. Our SRTI and SDAO positions are at a loss. The SRTI position actually hit the stop loss yesterday, although it shouldn't have. Kind of like my mistake. Or 2 days ago, yesterday, or on Friday. So like either yesterday or on Friday, doesn't really matter. Why did it hit a stop loss? Because like technically, once we go here higher than we were here, this pattern here would become invalid. Now if we check here, however, we see that the high here is 2007.31 and the high here is 2003.40. So it did not go higher, but the SRTI is a slightly leveraged ETF, and in the ETF it went higher, which caused the stop loss to trigger, although it shouldn't have. Now, other than that, let's quickly rush through what we have. So we have the 4 big indices we're invested in: GameStop and Disney. And in the 4 big indices, let's start with the Standard & Poor's. We're pretty much where we were before. Only thing is, the whole thing went a little bit further than we thought it would, and as a result, we now look like this. Again, we're in a waiting position. It's getting quite annoying because we have obviously now a bunch of red months in a row. As we can see here, we're down 30% year to date. We're still being up on the 2-year performance and long-term performance, and obviously that's probably the biggest drawdown I've ever encountered. Although we also had a 30% drawdown roughly from counting from here, it's almost 50% drawdown over the rest of the year. But my long-term results are still okay, so I'm still not worried, and Elliott Wave Theory has proved reliably enough. Now, before we jump into that, for those of you that might have just tuned in for the first time, to prove the point, so if we go here to portfolio, we can check, for example, our history. We can see here again, we have the SRTI position that hits the stop loss, although it shouldn't, but it did it because, again, the leverage difference between the actual index and the ETF we're invested in. But if you take a look at the other trades that we made based off Elliott Wave Theory in the recent couple of months, you can see that all of them have been, or almost all of them, like that's just 30 days, that what we closed in 30 days. If we look last 3 months, you can see there's also 1 or 2 losing trades. That's also SDAO, SRTI. So again, stop loss issue, although there it's like different stop loss issue explained in different episodes. But as you can see, every position or most of the positions that we opened based on Elliott Wave Theory actually ended up in a very, very decent profit. However, why is the portfolio still in red? Well, because the position sizes we picked for those investments are much smaller. So while we have like a huge portion of the portfolio invested betting against the market, we only went with 1 to 2% investments. in those individual positions. Yeah, in hindsight, should have invested more there, of course, but considering that my overall outlook still is bearish, it did not make sense to risk more here. Yeah, anyway, so yeah, well, right now, again, we're suffering through this wave 2 already for pretty much the entire year, which is killing the portfolio performance this year. And I already covered why we are suffering through that, why I didn't close the positions earlier on here or somewhere or so. Now we just have to wait it out. Yeah, like the SPX is bound to turn around. The only point where we would actually right now, since we already suffered the 30% loss, the only point where we right now would actually say, okay, now we're going to close out our positions, take the loss, and ask ourselves what the fuck I've been doing, would be if we get a new all-time high. That would invalidate this 0.5 here, or would force it. That's the tricky part about Elliott Wave Theory. While there are 3 impulsive patterns, there's a combination of corrective patterns. And overall, this wave 2 here will be a corrective pattern. And there's also one that's called the flat corrective pattern, where that wave 2, so that, or actually that wave up here would build a new high, but that's not the case here. So if we would see a new all-time high here, then all of this would become invalid. And we would have to ask ourselves, okay, then how far we can still go. We would have to revalidate. Although I have to say, I don't think that's going to happen. So I consider this like the least likely scenario. We already got quite far, but if we look here, our all-time high is at around 4,818, whereas here we are at 4,600. Now, to be fair, already based on when we were moving here, said it's to expect, or we should expect like a movement in the area of 4,400, 4,500. Now we went a little bit further. On the bigger scale, doesn't make such a huge difference. Short term, of course, it makes a huge difference, and it's like frustrating to watch your money lose value. But yeah. What I think is happening, and again, I might be proven wrong because like this year has not been that great in like forecasting the indices, is that actually the top is in and we will see the turnaround now. Like to get some additional information, some additional information, not confirmation. So let's check how much we retraced here from the all-time high to the current point. So right now we are looking at almost 88% retracement. Now very often the corrective wave would retrace between 38.2 and 61.8, which is also why we stuck around here, and then we had additional information that made us stuck around here, and now here we are. And anyway, so this is how it's going. The ultimate fail-safe point would be the moment we reach the 4,818 mark again, because that would be the moment where we definitely have an invalid pattern here, and we'll have to just call it quits and reevaluate. Yeah. In the NDX, we are looking at the same thing. So it went a little higher than expected. We have the new high here. We're again below the all-time high, but other than that, it's pretty much a very similar pattern where basically we're now expecting, okay, our downward trend. I know I've said that before, because before, I've mislabeled the chart. Happens. Nobody's perfect, as said. Can't get it always right. Now, theoretically, like there, if we look at a very small scale, now let's see what kind of retracement we have here. We could look on a lower time frame to get more information, but we see that even here, like if that is another wave 1, 2, then even here we retraced more than 61.8% already. And yeah, like we'll have to wait and see, but technically I expect the NDX or the Nasdaq also to now start the downwards journey. Now, if this were already a small one too, then it means that in the next couple of days or weeks, we would see a little bit of a stronger downward movement to maybe here and to like 15,300 roughly maybe, and then retrace a little bit up and then go down further, and then we would have another retracement and then down further and so on, and work our way in steps down until we eventually actually go below the 10,000 mark. Yeah, so obviously that's not going to happen in the next couple of weeks, but it's actually, I mean, I've misread the timing, to be honest. Yes, I mean, obviously for those of you that tune in more often, it's obvious, you already noticed. But like considering this year all took 1 year, now this year took almost a year. So to get down here, we're looking at pretty much the same thing to almost a year. Although that means that we recover the entire loss that we made, plus then end up in a decent profit. Although it makes it harder to confidently say that we will end this year with a decent profit. I'm not saying that it's unlikely that we will be in profit by the end of the year, but just that it might not be like the usual profit that people might be used to based on my previous year performance. We'll see. And yeah, and the DJI, same thing happening. So again, we went higher, although here it's not as clear because we again last day have a candle that goes up. Yeah. And is that candle higher? Here we have 35,645, and here we have 35,679. So that's actually a new high here. Yeah. So here the big question is like, will we get a little bit more upside before we have the turnaround or not? Now, either way, we can see that originally at some point we expected that we actually turn around here. And now in the DJI, we actually might get into the area where we can call it almost quits. Yeah, so almost. So here we have 36,952. And here we have 30, zoom in. Let's do that easier. Let's get a horizontal, horizontal line. Put it here, extend it, and then, okay, so there's still room before we would have to invalidate the entire pattern to turn around. If we consider this as an ABC corrective pattern, where very often wave A and wave C will be not identical, but move similar, then it cannot be the case here because it will get us to a new all-time high. So that has to be one of the cases where it's not happening. But we'll also see, like, although it's atypical that in the SPX and the NDX we saw a slight downturn, in the Dow Jones we got a little bit of an extra push here for whatever reason. So yeah, we'll have to, again, wait and see, which is the frustrating part. And the Russell 2000, yeah, it's been moving more or less sideways. So, like, I mean, we thought that we have wave 2 here, and we still might have wave 2 here. Here we are at 1,976, and here we were now at, actually 2,000. So here we will have to reevaluate what's wrong here, because this cannot be 1, 2, because 2 here goes higher, which means it has to be some other form. So basically it means 0.2 might still be, 0, 1, ABC, 0.2. So yeah, like that's going to be a tricky one. So either this 0.2 hasn't finished yet, so this here 1, 2, or that corrective pattern here hasn't finished yet with ABC, but we're actually looking at something further out here. Either way, same situation, like next couple of weeks are going to give us more information, and we'll see if we eventually turn out in the right direction. Now, moving on, GameStop again, like I made a separate episode about it that covers why Elliott Wave Theory doesn't apply that much, or might not apply that much anymore. But still, overall, we said that this year could turn into ending, now what's it called? Ending diagonal, yeah. So with 1, 2, 3, 4, 5, but for that wave 5 would need to be here, which means that's not the case here, which means if that is 1, 2, then this would be 1, 2, and then that would be 1, 2, and then that would be 1, 2, and then we would be in the third wave of a third wave of a third wave of a third wave, or so on, yeah, in a fifth wave. Which means technically, I mean, that's one option, in which case we would go up and quite substantially in the near future. The other option is that wave 4 hasn't finished yet, and we're still in this endless wave 4 sideways movement. Either way, again, our GameStop positions are already in profit for a long time, considering the profits that we took. And I'm bullish on GameStop simply based on their fundamentals. So, like, in a high interest rate environment where other companies have to pay more for their debt, GameStop actually has around $1 billion in cash, nice inventory, a huge investor base that doesn't sell their stocks, and on top of that also focuses on purchasing products and services from GameStop. And GameStop is expanding in multiple areas and building more and more strategic partnerships. So I feel like GameStop is going to be still the big play here in the long run, but we'll have to see how it plays out. And then that brings us to Disney. And in Disney, we said the last time already, okay, it looks like that's the situation we're facing, that this here is wave 4, because that's the previous wave 4 of a lower degree. So of that wave third, if we subdivide that third wave here, then it subdivides into 1, 2, 3, 4, 5, which means it's likely that this here is our point wave 4, but it's not guaranteed. It also happens to be the 38.2 retracement, which again is very often point of return. But as we also know, in other situations, we would see the 61.8 retracement, which would mean another 50% loss. We're not going to wait that long. Our stop loss is considered this 0.4 here. If we go down there, then so be it, and we consider this pattern here invalid. And if we go up here, then we have a lot of potential profit margin. Now, if we go down here, we have a limited risk because our stop loss is relatively close. However, then we would expect to go down much further, and then we would enter much lower. And then in the long run, again, we're talking here about at least months or years in the long run, make our decent profit here. yeah, so that's about how things are looking. Long story short, in many of those cases, we're in a waiting position right now to either get our patterns validated or invalidated, which sucks a little bit because, yeah, like it's nicer if there is some certainty, but it is what it is right now. And we'll have to see if it plays out like this or not. Now, if we look at Icon Enterprises, there we actually had our, we actually also had some nice profits there. If we check back to the portfolio and the history, then we can see that in Icon IEP, we actually also had 42% profit in pretty much a month or like 6 weeks. Because the idea was that this might be 1, 2, 3, 4, and that might already be 0.5, in which case we would see an A, B, C corrective pattern. We basically will see here which way it goes, because if it's like an A, B, C corrective pattern, we would go down into the area of 26 roughly again. Whereas if this is not yet the finished wave 5, because it could be that this is 1, 2, 3, 4, and now here this is 1, 2, 3, 4, where we have wave 5. So in which case we would get a new high first and then we would go down. So we're still in a waiting position here with IEP, with Icon Enterprises. We definitely made a nice trade. So we entered somewhere here and closed out somewhere here. So we weren't invested very long and we caught the upwards movement perfectly or relatively perfectly. And with that, we can actually look for new opportunities because we still have 13 minutes left. So we're going to take a look at the economic calendar. And we're gonna pick, what are we gonna pick? We already looked at most of those things. I think in Alibaba, we at some point had a losing position. So let's check Alibaba. And if we maybe now have a new pattern that we can recognize that makes more sense. So there we go. Inherit settings. Then switch to 2 days. And I'm gonna take a sip. Don't forget to hydrate, guys. So drink enough, yeah. I already forgot the overall pattern that we had. And as always, when we start labeling, oops, yeah, thankfully I closed the bottle. Otherwise, I would have spilled my apple juice. Apple, yeah, I think it's apple juice. Baba, do we have it here? We have it here, yeah. So we always have to double check the history. Here we have a low of 57.2. Here we have a low of 58, which means that whole thing here is 1, 2, which is nice. We should also, auto labeling should also be able to capture that. I'm assuming the prices are correct. Yep. And we can even here clearly see a 1, 2 or 1. No, it's definitely 1, 2, 3, 4, 5. And we can also see the subdivided pattern. So if we throw that in here, so in the, okay. I don't know where the grid went, to be honest. Yeah, so let's clear the data. So I don't know what's, the grid is back. Okay, now we have the pattern back. So we can clearly see, although I would say this here is 3, 4, because it's the strongest wave. So 3, 4, which one's the low point here? That low is 198.56, 198.56. Oh, it's not updated here. Okay, so 122, 129.77, 130, 129. Okay, that one here is slightly lower. Then we can delete that second pattern that it put in there. And we can also clearly see the, no, I would say this here is 1, 2. Why would I say that? Because if this here is 1, 2, yeah, but that's a strong wave. Not, yeah, like it doesn't matter much for the past here, to be honest, yeah. But then here we also would have to look on a lower time frame to see a 1, 2, 3, 4, 5. And then here we have a 1, 2, 3, 4, 5, where again with that should still check out with wave 3 not being the shortest. Yeah, so okay, it labels it like this, and if I put it like that, roughly like this, okay, wave 3 would be here, wave 4 would be here, and then then it would need to be an ending diagonal, of course, yeah, because we have wave 4 entering the territory of wave 2. Yeah, that's how it looks like here with an ending diagonal here. Then we have our corrective pattern here that retraces way further than we would expect, because usually, again, we would expect to retrace into the area of wave 4 of the previous impulse wave of a lower degree, which is what we just mentioned when it comes to Disney, that's what we would expect. But as we can see, it doesn't always happen. But we retrace almost 100% here. Yeah, thankfully we don't, because that would mean that we are actually in an invalid pattern. Yeah, but so far we are valid here. And but it's also nice because it means we cannot go lower than this, because if we were to go lower than this, then the whole pattern would become invalid, which brings us to the next point here, that this here then clearly or indicates that this here would be 1, 2, where we right now are in wave 3, and then 4, 5, which means Alibaba, while we probably invested earlier here and caught the downwards movement, might actually be right now a great investment. Now let's set that straight. So from here, we can also clearly see a 1, 2, 3, 4, 5 pattern up here, in either, either 1, 2, 3, 4, or 1, 2, 3, 4. Let's see auto labeling, what that does. Yep, so it says 1, 2, 3, 4, 5. I think it's more likely like this. But then wave 3 would be the shortest, so that cannot be the case. And we would retrace into this. So there we would violate the rule, so we would have to look closer. But it's also possible that this is 1, 2, 3, 4, 5. So that 1, 2 is down here, the small one. Either way, that's a 5-wave pattern here, so we're good. And then we have a 3-wave corrective pattern, A, B, C, in which case the first one can be subdivided into a 1, 2, 3, 4, 5. Then the wave B subdivides into some form of zigzag, but not a nice one, to be honest, like A, B, C. And then we have our our wave C here with 1, 2, 3, 4, 5 again, which brings us into this situation here, where now this here would be another 1, 2, 3, 4, 5. Although I would say that this here is likely 1, 2, and we are currently in the process of building wave 3, which will then have a corrective wave 4 and then complete the wave 3 of a higher degree. Now, if that were the case, it would mean that we actually have our so-called base channel here. And the moment we have a breakout from the base channel is the moment where we have a confirmed wave 3, which we're very close to getting at. So which means we actually are going to invest into BABA right now. And we're going to do, what are we going to do? We're going to invest, let's see. We're going to invest, let's say, what's that then? Let's say 2% of our equity roughly. Our stop loss in this case would be, once that pattern, can actually take it here, once that pattern would get invalidated, so our stop loss would be at 82.64, which I cannot set right now because the markets are not open, so I'll have to take a note for the stop loss at, what did we say, at 82.64, 82.64. And our take profit would be, we could actually leave it open, but our take profit would be, if we get a Fibonacci extension in this case, would be, that's too early. It would be just a small breakout. So definitely 128.77. That's where we're going to go, 128.77. So our risk is basically, if it's at 82, it's around like 20%, where our upside is around 30%. So it's not that big. However, we have to consider, actually, we're not going to set a take profit at all for now, because if we are right here, so if we're wrong, our risk is limited to 20% of the 2% that we're investing. Whereas if we are right, then our upside is not just this wave 3 here, but then we can also wait out the wave 4, which will retrace down to the base channel or the median of the base channel again. And then we have the 5th wave that takes us up further. Again, like the points here right now random, but like gives us further profit. So where's now the 0.5? Here, okay, so there we go. No. Okay, so that's how it would look like. Pretty much, I'll get rid of the Fibonacci retracement. So if we are right, then the point would be that we obviously wouldn't just have that 3rd wave, but we would have that suffer through the 4th wave, which might take us down into negative territory, or we might just take profits here once we have an indication that the 4th wave is in progress. And then we can either enter again or increase our positions once we're at the wave 4 point to take or to enjoy the journey for wave 5. And then again, same thing happens with this wave 3 here. So where once we reach a wave 3 point here, again, the 150 here are random. It's like we have to wait and see to determine the actual profit target. Wave 3 obviously should be higher than wave 1. So it means that we go above 120 definitely for that wave 3. and then eventually we'll have a wave 4 that cannot enter that territory again. So yeah, long term, it feels like that now that setup here is better. I think the last time we made the mistake, or I made the mistake, to assume that wave 2 already ended here, and we invested in assuming that this will return into 1-2 when then it went down further. But now that actually looks more like a corrective pattern. Therefore, it's now a better bet than it was the last time. And yeah, and if we consider again, like, it might not make sense to you right now, but again, then check out episode 1 of Daily Market Mastery, where we dive into the basics of Elliott Wave Theory. But besides that, also consider, as said, if you check out the history of the investments that we made the last couple of months using Elliott Wave Theory, which are all happened during live streams, so we all analyzed them in the stream, and how they paid off and how many of them paid off, then maybe you're also more confident into that assessment here. Now, anyway, I'm going to open that position, and we don't need a stop loss. We don't need a take profit, to be honest, and we can set that order and invest 2%. And with that, we pretty much have our 30-minute mark full. Keep an eye on my eToro feed, so make sure to follow there. I'm gonna share an update later this week how we're gonna handle the next stream. So again, next Monday doesn't make sense because it's just gonna be another 1 or 2 candles that we get added until then. So not much will change in any of the charts, and which means we might just skip 1 week, or we might switch to a bi-weekly format. Either way, I will share an update about that, as mentioned, probably also in the community feed on this YouTube channel. And yeah, that's the it for today. As always, thanks for everyone that tuned in. I hope you were able to take something away from it. And also thanks everyone that trusts me with your money and is copying my portfolio. So so hopefully now you know where we are at, or where I think we are at, and you'll be patient like I am, and we'll take it from there. So thanks for tuning in. Have a great day, and then see you all in another live stream. Till then, bye-bye.